And so if it took 14 years to get to 10%, the theory is it would take another 14 years and 90% of the world would own some Bitcoin. If it really is the technological innovation that I believe it is. And so, that would imply that we're going to go through a very big growth curve here. And, you've got this is, as a commodity, Bitcoin is, there's a fixed supply. There are only 21 million of them. It's the only, this is very interesting. It's the only commodity in the world where supply does not go up as a result of higher prices. Think about it. If gold goes to $10,000 tomorrow, we're going to mine more gold. There's just no doubt, right? Because we know where it is. It's just not economic to get it out of the ground. Whereas if Bitcoin goes to $100,000, tomorrow, there's not going to be any more Bitcoin created. So that's a very powerful thing. And so, there's 7+ billion people on the planet. There are 21 million of these coins. It's a very sound form of money. As more and more people come to see, I should save in this money, the price is going to go, in my opinion, much higher. I mean, I think we'll hit 100,000, then I think we'll hit 1 million, then I think we'll ultimately hit $10 million a coin. I mean, I'm sure my grandkids will be shocked at people who own one whole coin. I mean, being a whole coiner will be a big deal. It would strike me that the next run ought to take us to about 100, and that would probably be sometime within the next 2 years. And then that 100 would probably correct down to 40, we're higher than it is today. And then the 40, wave up from there might take us to, 200, 250, something like that. I mean, it's, it tends to go in waves. I mean, we've seen these cycles since it was formed. I mean, these were at much smaller degrees, but I mean, it went to 1,000, then it went back down to 200 or 300. I mean, I bought it at 17,000 in Thanksgiving of 2017, and went down to 10, then it went down to 3,500. And I bought more. But so it's quite volatile, as we've seen. But that you've got two things going on here that support it. One, you've got an adoption curve. I mean, I was involved in investing in the internet. Reminds me a lot of the internet. More and more people are becoming aware of it. More and more people are using it. The second thing you've got going on is you've got this underlying thing that's driving gold as well, which is the monetary debasement. So you kind of got two trends that push it. One, just more and more people use it. And you really need to read a little bit about that. I highly recommend a book by Alex Gladstein called Check Your Financial Privilege, which tells you the story of how people are using it around the world, how the unbanked are using it. All you need is a smartphone, and you can make lightning transactions. And there are poor women in Afghanistan doing technology work that couldn't figure out how to get paid. They're getting paid Bitcoin on their smartphone through the Lightning Network. And there are thousands of stories like that. Domestics working overseas, sending their money back in the form of Bitcoin so they don't have to pay the usurious fees to Western Union. So, these kinds of applications, or we call them use cases, are going to spread the development of this thing as time goes by. And, the fixed supply and the fact that, savings in this asset have tended to grow over time. If you take a 5-year perspective, there's never been a 5-year period where even if you bought at the peak, you weren't ahead. In fact, something on the web recently I saw that was very interesting. If you started buying Bitcoin at the peak at $68,000 a year and change ago, and you bought an equal amount between then and today, every week, you just turned positive on your investment because it was 68, it went down to 16, and it's called dollar cost averaging. Dollar cost averaging, yeah. Right, and now it's at 30, and you're positive. You're net ahead, even though you started buying at 68. So and that's how I recommend people to do it. Actually, is to dollar cost average into it because it is volatile. There's no doubt. I think there's a high probability we're at 60 by the end of the year in Bitcoin. We're at 30 now. That's not that far out there. And I think there's a high probability we're at 3,000 in gold by the end of the year. And the reason I say this is I see the cracks in the financial system. I mean, I think if anything, both of those projections are probably too low. I mean, in other words, it's probably going to be higher than that. But I don't want to say a higher number and then I come up a little short and you say, oh, you missed it. Gold stocks will probably be 100% higher by the end of the year. I think the GDX and the GDXJ will be 100% by the end of this calendar year. I mean, I can't believe how deeply undervalued gold stocks are. And just, if you allow me to shill my fund for a moment, I hope you don't mind. I run a gold stock fund that is deeply undervalued, so any qualified investor can have a look at it. We're also putting together a Bitcoin fund that does Bitcoin and Bitcoin private companies that I think is going to take advantage of this trend. Same thing, qualified investors. And anyone who's interested, reach out to me at my website or the other thing to follow, excuse me, my thinking I'm kind of a chatterbox or loudmouth on Twitter. So follow me on Twitter, and you'll see daily kind of what I'm thinking about. It's all sound money related stuff. So.